What's going on, guys, and welcome back to another video. So today, with it being a Friday, we'll be doing my weekly Trading212 Portfolio update. We'll have a look at what stocks/ETFs I bought this week. We'll see how my overall portfolio is performing in terms of percentages and capital gain or loss. We'll then have a look at each of my sectors individually to see how each is performing in comparison to the other. And finally, we'll discuss my plans going forward for next week. And with all that being said, let's dive right on over to Trading212. So here we are on my Trading212 portfolio. We can see on the left here, I currently have €9,110 invested. That equates about $11,000. So we're 11% of the way towards my overall goal of having $100,000 invested in the market. We can see €7,843 of that is my own capital and 1,266 is gains, or 16.14%. We can also see on the 1 week chart here, it was pretty much a flat enough week. If we go from Friday to Friday, for example, it's pretty much at the same level. Now, I did take advantage quite a bit this week in terms of dollar cost averaging into some of my positions, which we'll have a look at now. Over the last 2 weeks, I've invested a further €400, 250 of that was last week, and this week was the further 150. We can see here on the 3rd of May, I invested about €45 or so in the form of High Tide. We got another 32.7 shares. We then got 0.4 of a share of Barrick Gold, 0.13 of Nike, and also 0.58 of First Majestic Silver. Again, the whole purpose here was to get in at cheaper prices as they were all in the red. Then on the 4th, the other €105, again, was the dollar cost average in. We got 2.75 shares of the iShares Global Clean Energy ETF. We also got 0.04% of a share in Tesla. Now, I still want to get that to the 1%. I'll discuss that later on. Then we got another 2.3 shares of the ETF, the iShares Clean Energy, and another 57.6 shares of High Tide. Now let's have a very brief look through my portfolio pies in terms of sectors. Now we'll do this quite quickly because there hasn't been a whole lot of change in comparison to some other weeks. So communication services is up nearly 32%. We have 2 holdings here in the form of Walt Disney up 41% and Facebook is up 24%. I'm quite happy just to keep as is for now. I would like to have more money invested here, but because both stocks are doing so well and in the green, I don't really want to affect the dollar cost average here, so I'm going to leave this sector for now. We have €1,500 invested in consumer discretionary, up about 3%. 2 of the 3 are actually in the red here. Again, probably out of my 33 holdings, only probably 3 or 4 are currently in the red, so that just poses great opportunity to dollar cost average long term. We can see McDonald's is the exception here, up 11%. Nike is down 0.1, so it's pretty much break even, so I'm going to leave that for now. However, Tesla is currently down 5.7%, and I did mention earlier that we currently have about 0.8 of a share, so I do want to get this up to the 1 full share. So next week, if Tesla is still down in the red, I'm certainly snapping up more to get that 1 full share. We have €1,280 in consumer staples, up over 8%. 3 holdings here, Coca-Cola up 12%, PepsiCo is up 10.2%, and P&G is up 3.3%. Again, there's not much excitement or news here at the moment. I'm just leaving as is because they're all in the green. However, I did get in at cheaper prices over the past few weeks and months in all 3 of these stocks, so I'm quite happy about that. We have €685 invested in my energy sector pie, up 4.3%. Again, this just shows the importance of diversification. The 2 older school energy stocks, Exon Mobile and Chevron. Exxon Mobile is up nearly 78%, which is probably one of my best performing stocks, and Chevron is up 48.5%. However, the iShares Global Clean Energy ETF, which I have many detailed videos on in the description below, is currently down 14.1%. So that's quite staggering at the moment. Now, we have been dollar cost averaging in here a lot over the last few weeks, but my main plan going forward for this ETF and another stock I'm going to mention later on is a kind of cool off period of a week or 2. Even if the stock goes down further, I'll just leave as is. If it goes up in value again, well and good. But for the next week or so, this ETF and another stock, again, that I'll mention later on in the video, I'm leaving for a week or 2 and we'll see where it goes. We have about 8% of my overall portfolio invested in my 2 main ETFs. We have €808 invested, up 23.66%. The S&P 500 is up 23.6%, and the FTSE 100, which tracks the top 100 stocks in the UK, is up just under 20% as well. Now, a lot of people have made the kind of assumption or kind of suggested that I should just invest in ETFs. For example, if both of these are doing better than my overall 15 or 16% in the green. However, I beg to differ because that just gives me more opportunities to dollar cost average. If I have, let's say, 30 odd individual stocks, I'll have a lot more opportunities to dollar cost average into 1 or 2 of them every given moment or every given week. Whereas if I just invested in these two ETFs, I'd rarely get a chance to dollar cost average, as in get my average price down, because they're usually in the green if you hold long term. Probably one of my best overall sectors at the moment is still the financial sector. We have €1,200 invested and are up just under 40% here. Now, I haven't invested any further capital here in a long time, mainly because all five have been doing so well, so it's very hard to get a chance to opportunity to dollar cost average. So that's probably not a bad thing either, I suppose, that they're all doing so well. We can see here Visa and MasterCard are both up over 15%. JP Morgan and Chase up 63.7%. Bank of America is up 71.6%. So that's very good in my opinion. And again, this is probably mainly due to luck and timing of when I actually bought in. And Goldman Sachs is up 82%. So along with the energy sector stocks, these are definitely my best performing. Another sector that I haven't got the opportunity to dollar cost average in a fair few weeks now is my healthcare pie. Now, I had opportunities in Johnson & Johnson and Pfizer a fair bit a few weeks back, but again, they have consolidated and went back up in price. So we can see at the moment we have €930 invested, or €922, up 16.65%. Johnson & Johnson is up 14, AbbVie up 33.5%, and Pfizer is up over 10%. Another sector that I wasn't expecting much from, but again it has surprised me for the good, is the industrial pie, up 27.95%, or nearly 28%. Now, we only have less than €300 invested here. Again, just like financials, when I bought into these three stocks, they nearly went up in price straight away substantially. So again, that's probably not a bad thing either. Eventually, they might consolidate and come back down a bit, and then I'll snap up some more shares. 3M is up 22%, Caterpillar is up over 51%, and Waste Management is up 25.3%. Two of my newest additions is in the materials pie. We only have €78 invested here at the moment, but up 4.3%. Now, I did ask in videos prior to this for suggestions, and I did pick two suggestions that you mentioned in the comments below, so thanks very much for that. They are Barrick Gold up 7.8% and First Majestic Silver up 1%. Now, First Majestic Silver was down about 8 or 9% when I bought in originally, so that was probably a good thing, to be honest, because I only put in a tiny amount of capital, so that gave me even a better opportunity to dollar cost average there. And at the moment, I'm kind of happy just to leave as is for now. What I'm going to do with these style companies and materials is only invest further on the two conditions. Firstly, obviously, that they're in the red, and second of all, if I have no other opportunities in my main pies, such as technology, consumer discretionary, etc. So this materials pie will probably still be my smallest allocation of my overall portfolio. My next pie is my penny stock pie, and we have one stock here which is my worst performing overall. However, ironically enough, it's one that I have the most promise for and opportunities in my opinion, which is quite ironic. But again, it's High Tide. We're down 14.6%. Now, I have made a lot of videos in the past, which are in the description below, of all the fundamentals and catalyst for this stock going forward. So long term, I really do believe that High Tide has a lot of potential, and if anything, I'll be buying more. However, just like my iShares Clean Energy ETF, I have been kind of focusing here a lot over the last few weeks. Again, only tiny amounts of capital to dollar cost average, but just like that ETF, I'm going to give High Tide a bit of a cool off period for a week or so, just to see where it goes. I will definitely not be selling. But again, what I'll be doing here is if it goes down further in price over that week, after that week I'll even buy more at a cheaper price. But if it goes back up in price, well and good as well, as we'll be getting closer to the green. So for now, the iShares Global Clean Energy ETF and High Tide, I'm going to give a cool off period for a week. Another sector that I want to get more stocks in, again probably just one more, is in the real estate pie. We have, again, in prior videos asked for suggestions, and thanks very much for everyone that has suggested stocks. I'm currently looking into them. And again, I just want to add one further one here. At the moment, we only have the one in the form of Realty Income. We only have €67 invested, but it's up 14.25%. Next up, we have one of my larger pies, and that's mainly due to the fact that I have a lot of interest in this sector, obviously, probably just like everyone else, is in the technology pie. We currently have €1,416 invested here, up 24.8%. All five stocks here are currently in the green. Microsoft is up 19.2%. Amazon is up 6.5%. We then have Apple up 15.8%. Alphabet is up 58%, so I'm quite impressed with that one. And IBM is currently up just under 25%. In terms of my plans going forward, again, as mentioned, I'll give a cool off period of 1 week for my iShares Global Clean Energy ETF and High Tide. Both are down the most in my portfolio. And again, I have been tipping away here the last few weeks and dollar cost averaging, but just going to leave for a week now to see where it goes. If it goes down further in value, well and good, I'll get in at an even cheaper price. If it comes back up, well and good as well, because we'll be getting back closer to the green. Overall as well, we saw that the likes of Nike is in the red. albeit only 0.1%, so we're going to leave that for now. But the main one that I've seen in this video, or this portfolio update, is Tesla, down over 5%. So if that carries on next week, I'll be sure to be buying a lot more shares in Tesla to get my overall average cost down. So in the long term, we'll be making even more of a profit. Also, again, as mentioned, I want to start looking further into that one extra company I want in my real estate pie. I'll also want to add a utilities sector stock, just the one there as well, which will bring my overall portfolio then up to 35 holdings. So that's pretty much it for today's video. I just wanted to give a brief update on my Trading212 portfolio update for this week. We had a look at my overall portfolio performance, how each sector is doing, and also my plans for the weeks and months going forward. Thanks very much, enjoy your Friday and weekend, and I will see y'all in the next video.